Hello, 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 and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 pips rocking and rolling here, 29th of April, 2018. No trade calls, no recommendations, or response for their own stuff because we're here for educational purpose only. So, what's going on as we go into a new trading week and the last trading day of the month? Let's see what we get. We have a fairly interesting data week. There are plenty of data points, a lot of central bank speaks, a lot of data. It will be interesting to see what kind of data we get out of the UK, seeing how the market's been reacting. We've got that FOMC on Wednesday, and then, apart from all the other data points, as we said, we end up the week with basically non-farm. So clearly a lot of potential for more moves and excitement in the markets. Now, where are we? What's going on? I think the most important thing is, if you look at the market in general, it's an interesting close because I think on a lot of the charts, and we've been seeing this a little bit across the board, on a lot of the charts, what's happening is they're giving both the bulls and the bears ample reason to hang on to their bias, which usually means choppy market, but probably a lot of pain for everybody involved, but we'll have to see here. So here on the ES, essentially nothing much has changed, right? We're still stuck inside these cluster of moving averages. So we got the 100 and the 50 to the upside and the 200 to the downside. And as far as the bears are concerned, we've got that heightened volatility. We've got a lot of ugly moves across the board. We've got a lot of companies that are popping higher in earnings. They can't hold the gap ups. Question is, what else is there to price in? Is this as good as it gets? And we keep on making lower highs, right? The bears, sorry, that's for the bears. The bulls, everything's good. It's just a little bit of wheeling and dealing as we're going through the beginning of the year, as we're going through earnings season. But buy the dip. There's no reason not to buy the dip. We keep on getting bought at the 200. We keep on making higher lows, and the pattern is bullish. So again, you can make an argument for either side, and just to prove the point, or to make it even clearer, if you look what's happening on the weekly, as clear as mud, right? Bears trying to smack it down, bulls trying to bid it up, and we're still stuck. We ain't going anywhere. So again, I think I could probably make a fairly eloquent case for both more upside and the downside. We like to always look at both sides of the coin, but our preference is still that there's a very good chance that we've seen the highs for the year. We would not be surprised if we spend the whole year going sideways, not doing much, but we still think that those lows need to be retested. And if you look at again, it's a fairly similar situation, whether you're looking at the ES, whether you're looking at the YM, or whether you're looking at the NASDAQ. Very similar kind of pattern, very similar kind of action. Now, a lot of people will probably argue that the NASDAQ is holding stronger, is holding more of a bid. As you see, it's still holding strong inside that 50 and that 100 DMA. But again, NASDAQ tech names have been leading this rally, and if we were forced to make an observation on the tech names, we would say that there's been an awful lot of ugly action, right? The big question is it over and done with after Amazon on Friday, right? Big gap up. Another one like the financials been doing. Basically, we rip up a weekend. This is a very ugly close. Now, we'll have to see how the month closes. We'll have to see what happens. But essentially, if this starts trading back below the 50, this could be, all lights out. So this is something very interesting to keep an eye out for. We were looking at this as a sell zone in the weeklies. What we're saying, basically, we expect to see some kind of a rip higher towards the 1700, but we expected that to hold. We'll have to see what happens here. But again, if you look across the board, there are a lot of ugly charts in the tech space. Let's see if we can if this plays ball. So if you look at something like eBay, let's see if it will load. eBay on the daily, not exactly the picture, a picture of health. If you look at Apple on the daily, not exactly picture of health. You see it's holding below this 200. Let's see if we can find a couple of other of the Tesla. Not exactly a pretty chart. You know, and you can, what else we got? Just don't want to go through all of them. Twitter. Let's see if this loads for some, not exactly a pretty chart. Where is it? PayPal. We've been looking at this for a while too. Not exactly a pretty chart. Google. Not exactly, you know, super bid. So again, the big question is this as good as it gets for tech? And since tech has been leading the market higher, you know, is that it? Now that doesn't mean it can't be choppy. That doesn't mean it can't spike higher. But you know, the highs may be in. I think if you had to only look at one chart going into the week, you know, tomorrow you'll be looking at that Amazon chart. And again, if you look at FANG. In general, you see that the pattern is still the same, right? That's a big question is right? We put in the top. Is it time to test lower? So again, we'll have to see what happens. Now, in terms of the other big move everybody's been looking at, and it's another one which you could really read it either way, is the DXY. We particularly like this chart because it's one of those locations, and I'll show you why. So essentially what's happened here, we're stuck. We spent the whole year going sideways, going nowhere. We said, watch out on the break higher. It looks like it wants to break higher, but you have to keep an eye on what happens at the 200 DMA, right? And if you put that 200 on the chart, and if you remember the guys who follow on Twitter, we highlighted this on Twitter saying this was a bit of a twilight zone. This is just a lot of, don't be confused with velocity of move inside range as long as we hold here. The big next piece of information or piece of the puzzle is if we get a day close above the 200 DMA, or after we tested the 200 DMA, if we get a day close back below the 91. That's where we'll get a really important piece of information, the next important piece of the puzzle. Here, we don't feel anything too important has been handed out. So similar to what we discussed on the equities, the bulls here are saying, hey, that's it. We've been trading extremely heavy. We consolidated. We've been going nowhere. We've broken out of the consolidation zone. That's it. You know, new highs. Everybody's caught off guard. Record short positions in the dollar. That's it. It's finished. We put in the low for the year. We're ripping higher. The bears are going to say, no. It's just been a lot of chop, right? We just popped higher. Look at the way the 200 DMA held it, and we're going back down. What are you guys on? What are the bulls on about? This is a particularly interesting chart from us because the way we tend to be contrarian, but we like to look at what happens 80% of the time, not what happens 20% of the time. And we try and focus when we get a chance to play some kind of asymmetry. And ideally, when both the bulls and the bears understand that or agree that the healthy move is in the same direction. So regardless whether you're a bull or a bear, the way we look at it, if you look for healthy markets and you understand that markets tend not to only move in one direction, if you are a bull and you like the breakout here and you think we're going higher, you probably realize that in a healthy market, or 80% of the time, what should happen or what will likely happen is that you will see some profit taking in that 200 DMA. At that point, the market will pull back a little bit. Ideally, you want it to pull back as little as possible, but coming back here into the breakout zone would be fairly pure, and then you can go and continue higher. And that's a beautiful little chart, beautiful little pattern for a bull. If you're a bear, you're thinking, no. This was just the sideways chop, as we said, and the 200 is going to hold it. So here, you're looking for this to come back down. So again, this kind of chart has the potential to fool a lot of people, but the healthy move here, both whether you're long or short, would be to the downside. So we always like looking for opportunities to get short into that kind of zone. And if you see here what happened, essentially, you see you've got this little base here before we broke down aggressively. If you see how we traded towards the end of the week, right? We came back into there, pressed into that 200, negative close on the 1 hour, beautiful little chance to scalp to the downside. Now, if you're a bull waiting for, ideally you're waiting for it to come back down here so you can get back long. And if you're a bear, you likely held over the weekend looking for a little bit of a move lower. Then we'll have to see. But again, these are very nice chart locations. So what else? Crude. And this is another interesting one. We've got a lot of commentary over the weekend. We'll have to see what happens. But essentially, I think the way everybody's looking at this is, unless we get clarity on the Iran deal, unless these geopolitical concerns fade, this is likely going to continue to stay bid. I think if it weren't for that, pretty much everybody agrees that we should see a little bit of a pullback. Again, this is the kind of chart we like, because even here, what kind of concern to the upside hasn't been priced in, right? What hasn't been priced in? So even if those worries are confirmed, we'd still expect there be less room to travel to the upside short term than to the downside. So again, going into the week, 70 marks the spot. As long as we can't get daily closes above the 70, we would expect the price to try and pull back into 66s, 62s. If there's no more geopolitical concern, et cetera, then we would expect to see a move all the way back to the 55s. And again, every move higher here on any kind of thing that may materialize, pretty much everybody who, the vast majority of people who want to be aggressively long are already long. So, we still think there's potential to play this to the downside. Technically, we're not huge fans of holding overnight positions. We're not huge fans of holding positions over the weekend, but intraday, clearly we're looking at this as opportunities to try to trade the downside. And what else? I lost my train of thought. Going back, sorry to zigzag across, to skip from one to the other, but you know what we said on the DXY? Another thing which we'd be looking at is, remember, this is the chart we've been looking at, and we posted on Twitter too. We said we don't really think the 122 is that important. We really don't think the 124 is that important. That was both to the upside and to the downside. For us, the key zones are how we behave here into the 25s, 26s, and 21, 20, right? 121, 120. So again, here you see the market's just been going sideways, and as opposed to the DXY, which has broken out of that range, right? And euro is still inside that range we've been holding for the whole year. So it hasn't broken out yet. If anything, it's trying to base exactly where you'd expect it to base. Now that doesn't mean it can't do this and then break lower, but it's the same kind of chart, same kind of situation, that whether you're bearish or bullish, you probably understand that the healthy move is higher, even if it has to resolve lower. So again, there are a lot of interesting charts, very tradable charts across the board. Cable, this is one of those where it's we called it the apparent simplicity in trading. These looks very, very easy once they're done. But again, it's not a question of being easy. It's just as hard as you really want to make it, right? Here we've discussed this in detail. It goes back into previous yearly high, puts in a beautiful daily, actually starts with a 4-hour reversal, and now it's in place. So right now, you would have expected it to bounce at mid around this zone if it was going to be a healthy move, similar to the way you'd expect DXY to move down from that 200, is the same way you'd expect euro to bounce a little bit. What is the market telling you here? The market is telling you that it's not a healthy move. In the same way that the rip higher was very aggressive on, the data and hope of rate rises, here is the market's really being caught off guard. So what's happening is it's unloading in brackets, unhealthy or extreme fashion. It's just moving in extension. So you see these pauses serve as the bounces, and essentially it's going lower. Now, on the big move, is it stopping in the middle of nowhere? No, it's stopping exactly where you'd expect it to move. Here, unless a miracle comes out in terms of data or a miracle comes out in terms of DXY, here you would expect any bounce to be shallow and any bounce to find sellers to ultimately try and come back down and complete to the bottom of this standard deviation channel and back into the 200 DMA. But again, this is a beautiful little chart. I would really recommend, don't be a pig. You want to be aggressive on your trails if you're managing partial, but the way we trade, no way we would conceive if you're short here, still holding 100% of that short position here, right? Even though we think there's a good chance it'll make it back to the 200. But again, this is a very interesting zone. It's likely all going to be about data going into the week on GPB. And then last but not least, what else is everybody? And by the way, guys, send me a note on Twitter or hit me up on the blog if there's anything you guys want me to cover on these Sunday sessions. Again, I'm just doing it to pay it forward, and I'm just trying to go through what I think will be the most interesting things going into the week, trying to look at charts that will hold for more than a day and try to help people with some of the context, some of the things which we think are going to be important in the market. So if there's anything we're missing, anything you want me to focus on, I'd be more than happy to do that. Bonds, right? Everybody's looking at bonds. Nothing much has changed here in bonds. I think here everybody's saying same as DXY, you know, record short position on bonds, record short position on bonds. This could easily bounce a little bit. This could easily bounce a lot. But unless something fundamentally changes, we'd still expect to see more downside here. The only way we would consider tactical longs on the ZBs is if we get daily closes back above this breakdown zone. Then we think it may be interesting to start to look for tactical longs, or on a big puke, and then at the same time the market starts to puke hard, and by hard we mean 10+%, then we'd be looking to try and get long ZBs, ZNs, right, across the board. But right here, look at this breakdown zone as being the pivotal level. And if you look at so that was ZBs, if you look at the ZNs, very similar kind of situation, right? Held very, very heavy. We went right through the 123 extension on this move. This is a beautiful little short, and here it's looking for direction. So as long as it holds below this 123 extension, expect it to continue to move lower in extensions. If it can stabilize above, then it could easily start to bounce a little bit, but this is going to be, unless something silly happens in the market, this will likely act as a fairly good brick wall, okay? So I hope that was useful. As always, thank you for liking, thank you for sharing, thank you for all the banter, thank you to all the usual suspects who send cool stuff through by email and on Twitter. You know who you are. Have a great one. Talk to you guys soon. Bye-bye.